Two things here. One, basically the fact that this is going to be the biggest, and as all of you know, and you've been also articulating it, 65-70,000 crore was what was talked about initially. But because of the situation, it was not possible to go ahead with that kind of number one. Number two, if you're looking at the multiple, maybe in Indian markets, Indian insurance companies, others listed companies have that kind of multiple. But if you look at the size of the corporation and the fact that if we compare ourselves to the biggest ones in China, maybe typically the Chinese companies, the government Chinese company also has around 0.7 to 1.1. So I think ultimately it boiled down to that.
And sir, the contribution of non-par remains one of the lowest in the industry. Going forward, what is your plan to increase that, and what would the mix look like in terms of par versus non-par?
We have already, we were very strong on non-par maybe 20 years back. It was market dynamics that made us change. Customer preference was more on the savings part of it rather than. But then guaranteed addition and guaranteed savings protection has also come to stay. So we have already changed quite an extent last couple of years. And going forward, I can't really tell you what the mix will be like, but we are growing the non-par quite substantially last year also. So that will continue to stay.
And the market share of the individual policies is something which has been declining over the last 3 years. What are you doing to arrest that decline, and how do you see that segment growing going forward?
So India, as you know, is as a penetration very low compared to our peers, global peers. And LIC would like to definitely work on that, and more the Tier 3 and rural sector, rural places in India, we have been working very hard for this. We will be more interested in ensuring that we grow the penetration in terms of policies more than the premium, because the ticket size will ultimately come as people start taking insurance, as it start looking at other products, then the ticket size will grow. But initially our whole idea is to do this, and we have been growing on numbers as well. It was a bit flattish. COVID, however, did create initially a lot of anticipation that people would be now interested in protection, they will be interested in term cover, but sort of it's waning again, because then once people forget that illness is not there, it's not there anymore. But this is something we'll work on constantly.
But LIC is the biggest which is there in the insurance space. How do you plan to kind of take on the competition, because the other players are growing quite fast in the urban and metro regions?
So if you look at the IRDA figures that have been reported last couple of months, you must have seen that even though year on year we must have lost a bit of market share, we have regained it in the month of Feb and March. In fact, our growth in premiums were the highest in the industry, both in the month of February. March was substantially good at around 50% growth. So the point that I want to make is that we have for long been holding on market share. We have also regained market share in some months. So this is something ebb and flow, and it will continue to happen.
Sir, you have given discount to policy holders 60 rupees per share. For retail, it is 45 rupees per share. What is the rationale for that, and is there any underlying message in that?
See, underlying message is that policy holders have really contributed to the growth of the corporation right from 1956. If you look at capital, they are the people who have provided capital. Indians have provided capital to us. So we believe that it was time to pay back and give them a better discount than what others would be getting, and that was the underlying.
Given the fact that you have managed, or you have decided to land in these choppy waters, how do you see these factors going forward? And also one question will be, post-listing, will we see a LIC 2.0?
So choppy waters is fine, but I can't really predict how things will pan out in the global markets and the global situation, of course. But not 2.2, I have said this before, that this is going to be LIC 3.0. So when we nationalized life insurance in 1956, when 245 companies merged, we called it LIC 1.0. And we really took insurance to the masses in our country. And I think we can be given the credit that we created the life insurance market in India. When the market opened up with the kind of competition that came in, people probably thought that we would lose market share like it has happened to the rest of the globe. That didn't happen. We continued to hold on to substantial market share for long. So therefore, that is the phase which I call LIC 2.0. And now, let me finish. So now this listing, a totally different animal. if I may say so. So that we are confident of going through with that, and the changes that it will bring in, and internally the kind of changes that we need to do is already in place and being worked upon. So this is going to be LIC 3.0.
How much to wait for further dilution you've seen there? If at all you plan, how much time you have before that you
As
come
I
up
said,
with-
that is something that we'll have to ask government, and we are not discussed this part with the government. Maybe after the listing, when things settle down, maybe we'll sit and discuss that. But as I said, not in the near future.
But
Your
Mr.
price
Kumar,
of giving
one of
the-
the misnomers is that it's a public sector entity. It's not nimble enough. It hasn't been nimble enough when it comes to a lot of value-added products and new products. What's your take regarding the same? What would you say?
I would say we have been nimble to the extent that we could, because we have a very large base. We have a large family of 1.37 million agents. They are part of the family. We have brought out products as and when it was required for the changing. In fact, ULIPs were introduced by LIC in India, not by the private sector.
Well, I think you have only 1% share in that, right?
But that's something we are growing very fast. And again, as I said, that is based on customer preference also. And how many people in India are really now they are getting into ULIPs and mutual funds. So this is the time when this segment will really grow. But we have been very agile otherwise. Our technology platforms have been very good. Digital payments from customers have grown almost 90% the last 1 year. 90% is quite a big chunk. And I think I would give a lot of credit to the JAM Trinity, the Jandan Aadhaar mobile that government had brought out 5 years back. That has really created a lot of financial, initiative from the part of even the deep rural markets. So that has come to say, once people are financially, able to understand, I think they will also start buying these kind of products, and we are ready for that.
And the contribution of VNB to EV is sub 1% for you versus private peers, which stands at 7 to 15%. Where do you see that headed?
Let me Ashok to say this.
Yeah, actually, VNB, as you said, the VNB is proportion to EV. Initially, as you say, it is not very high as it stands for the other insurers. Going forward, I think once we grow, because we have a very big base, and if you look at our EV, the contribution from the other economic variation is quite high. So over a period of time, I think you will be able to see something which you will see it in the market.
And there was a lot of buzz in terms of the analysts that the adjustment that happened in the embedded value was a bit of worrying sign. So could you explain what would be the impact of it going forward? How would that play out?
No, can you
The
please?
adjustment that happened in the embedded value when it was there was a bifurcation that was
Okay.
done. So on
From March
account
to
of that,
September.
how will that move on?
See, actually, what has happened is the fund bifurcation, when due to the Act of Parliament, amendment to the LIC Act, mandate that fund has to be bifurcated into par and non-par. When that bifurcation happened, automatically there was a unified distribution ratio prior to bifurcation at 95.5, which was subsequently amended in the year 2012 to 90% or more. Even though that was amended, government allowed LIC to continue with 95.5 with an option to revisit in future. With the current 2021 Financial Act amendment and consequent amendment to LIC Act, LIC board has to have a distribution policy wherein the 95.5 is moved to 90-10 over a staggered path, and this will be in line with the market. Now, what happens is when the fund was bifurcated, the earlier when it was a unified fund, the credit towards the mark-to-market changes and the global reserves, release of global reserves, that was going to the maximum of 10%. To IEV, whereas when the bifurcation is done, the 100% of that credit goes to IEV. So this is the reason for the major change. So going for, I think once this change has happened, it has taken credit for the entire movement upfront, because that is how the mechanics of IEV works.
So
when
the
you
impact
look-
of it is factored in. Whatever had to happen has happened in terms of.
Yeah, also because see what happens when the surplus distribution changes, IV is actually the present value of the future profits.
Okay.
So all those which will happen in future is also taken credit in one go.
The investment strategy of LIC, the way it has been, will it change once, we're listed, as everybody is speaking about? Will that strategy also change?
We may have to rethink the strategy. We may have to see whether we can. Already we have changed the strategy to an extent where we have a separate fund for ULIP, for example. ULIP is somewhere where we can't be just holding on to the stock, we will have to churn them. So that is where we have been able to generate quite a good bit of CAGR on our ULIP products, as Ashok knows. So that is where probably we'll do more. But when policyholders' interests are involved, I think holding on makes better sense for the longer, because it's for a long term, it's for 15, 20, 25 years kind of thing.
Mr. Kumar, since you're such a big investor, would you elaborate a bit more of how or which direction will this strategy change when you're talking about that investment strategy can change? What
But
can happen?
this is something that we are still working on. So
But directionally,
directionally not much change, because at the heart of the entire AUM is a set of policyholders who have mostly par, and for them long term is more important.
Would there be
As
any
we grow the
restrictions or
non-par,
something?
possibly we will have to have some shift. And now that we have split the fund, possibly the investment strategy may have to be different for this fund and the other fund.
No, but
Beyond
would there
that-
be restrictions that we won't put money in the non-ESG counters or something like that? Is that kind of
No,
shift
no,
which
we
is
have not
possible?
taken that kind of a call as yet. This is something that we are still working on.
If you talk about price to EV, compared to private players, it is half or less than half in some cases. In the long run, do you see this coming at par? And if yes, what is your expectation?
It will depend on how the share price, goes up, goes down, and how it reacts. So that is something we'll have to wait and see. I can't really say now, but then going forward, I think it will improve substantially. And Ashok, you have something?
Yeah, actually, there are the two variables. One will be post-listing, it is market-driven. The second is the intrinsic value in the business. So how these two play out is something, because we have been reporting EV from 2020 onwards. So we don't have any history of EV moving backwards. And simultaneously post-listing, we do not know how the markets will play out. So we hope by the very structure fabric of the company's corporation is to grow well and take care of the business. So basically we think that should take care of your EV multiple.
And one of the things that analysts talk about is that how there has been an underutilization of the bankassurance channel. That hasn't been done so far. What is your expectation going forward? How are you looking at deepening those relations or expanding those relations as well?
We have been working on this for last couple of years. In fact, we have the highest number of bank outlets which are tied up with us, more than 60,000 outlets.
Okay.
But on the technology part, I think there's something that we are working on right now, because each bank has a different technology platform. We are trying to see whether we can match each technology platform for each bank that we have. We are also finding out whether people in the field can also assist our branch officials, marketing officials. And this year we will be working on having an entire different set of technology to enable us to grow the bancassurance business. Now, even if the percentage is low, it is only because of the great contribution being done by the agency network. So in terms of percentage, it appears to be low. If you look at volumes of bancassurance business, we are maybe third or fourth among all the insurance companies.
And as far as this home loan business is concerned, so it was mentioned in DRHP as well that it will be between LIC Housing or IDBI. So has there been some movement on that part?
No, not yet. We are working on that. So we'll have to find out whether who will sell it, because both can't obviously with this kind of thing. But this is something we'll be announcing very soon. Of course, it will also be along with the disinvestment IDB also, everything happening together.
So my side, on the non-life side, what is the strategy? And one thing which everybody is now speaking about is that, especially in the non-life segment, the digital insurance players, the players who are majorly into digital, like sort of Acco, Digit. How is LIC in the non-life segment really looking to compete? Because the future is right there.
But we are not in the non-life, no, at all.
So, is there any plan to enter into that segment?
No.